Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on natural gas on the hourly time frame to start. So the bears are still in absolute control of natural gas. The bulls' only hope currently is the little double bottom that we have here at the lowest price we've seen, 2831, and then we drop down and hit 283. So certainly not a strong bounce off that level at this point, and really just grasping for straws here to try and give the bulls something to lean on, because it's all bears all the time, and that is currently, without a doubt, the trend that we've been in. So if the bulls can somehow see some kind of rally here develop off of 283, they're going to have to break this recent high of 2899. So if we get over 290, we have a double bottom and then a break of the lower high pattern, which would be step number 1 for the bulls to attempt to see some recovery here. And they have a lot more work than that to do. That would just be step number 1. We can see on the daily time frame that it's been nothing but bears. It is a bullish reversal inverted hammer candlestick here. You can't really see it because it's being blocked by the volume. It's one of the weaker bullish reversal candlesticks. I normally don't really like them. The psychology of what's going on in this candlestick is after a move to the downside, we have a bounce attempt by the bulls, one last push by the bears to the downside, and then the bulls show up and take back over in the short term. So we're going to have to see a green day on Monday to get that bullish reversal candlestick confirmed, and then it's all about that double top. That's the level for me personally at this point. Bulls aren't really going to prove anything to me. They'll prove something in the short term if they can get over 290. But in terms of trying to reverse the daily downtrend, they're going to have to break this double top of 2994 and start to try and fill this gap back up to 3035. So that 2994 level is extremely important for me personally. And checking in on the weekly time frame, we can see the bulls really didn't do anything to bounce at all. We're closing at the low of the week. We've got our absolute must-hold level of 2764, and we're not very high above that level at this point. Checking on the daily time frame one more time, we've got that RSI right down at the oversold level. We have not been oversold in 2017, and looking back historically, what has happened when we have been oversold? Obviously, we see bounces, but the question is, how long can we stay oversold? And we do have a couple instances where we did dip well below 30 on the RSI before the bounce played out. So just because we're at 30 RSI doesn't mean we're going to bounce. It does mean to start looking for a bounce, but we have to get confirmation of a bullish reversal candlestick. Looking at UNG on the daily time frame, bears still in full control. The double bottom here is 715 and 714, and we have not been able to close over the 8-period exponential moving average resistance since back on January 27th. So almost 3 full weeks now with rejections from these resistance levels, and we'll be watching to see that resistance, which is currently 741 and dropping fairly rapidly. Weekly time frame looks exactly the same as natural gas. Ever since we lost that 50-week moving average, back tested and rejected, it's been nothing but bears, increasing bear volume, and the absolute must-hold level is down at 685. So that's what we've got here for natural gas. Congrats to the bulls. It's been a really nice play ever since we broke this low of 3169. That was the signal for the bears, and we've seen a 33% or a 33-cent drop and a 10% drop in that time. So nice job by the bears. We'll see a short-term oversold bounce likely develop in the near-term future, but need to be patient looking in the other direction because we are fighting the overall trend. Thanks for watching. Have a great long weekend.